Good afternoon, everyone, and welcome to our life insurance webinar. My name is Sarah, and I am from O'Neill Marketing. So we want to welcome all of our agents and thank you for joining us as we learn more about selling various insurance products. We like to empower our agents and believe that knowledge is power. So you guys are smart to be joining us today, and hopefully this webinar will hold a lot of value for you. Yesterday, we had a webinar on ICRA, which is a program available to employers as an alternative to selling group insurance. Tomorrow at 1 p.m., we have a webinar with Senior Life, and they will be talking about selling final expense insurance, which is burial and funeral costs. And the content from these webinars and the recorded version can be found on your agent portal, as well as our YouTube channel. But today, we are learning about life insurance. And Eli Santana is our go-to life guy, and he's available to help all of our agents sell life insurance. So we have a small group today. Please do not be shy about asking questions, and Eli will answer them. If you want to type them up in the Q&A on the left-hand side, he will be able to view those and answer them. So Eli, thank you for joining us today, and take it away.
Sarah, thank you so much. And just to clarify, does everybody hear me?
Yes.
Perfect. Thank you so much, Sarah, and thank you everybody for joining the call. I'm so excited about doing this with O'Neill Marketing. Whoever works with O'Neill, they all know they give great service. At the same time, their support staff is phenomenal. Just before I start, I'm going to give you a quick background of how I work and how I've been in the industry. It's going to be 15 years. I started with a company called Penn Mutual as an internal to external. Then I decided to open my own BGA firm of insurance with life insurance, long-term care, annuities, and disability, working for O'Neill Marketing. And this venture, what O'Neill can provide from the experience that we have about over 350 carriers across the board from these fixed product realm that we can provide for you as your agents or agencies, from life, annuities, disability, and long-term care. But what we're going to offer today, we're going to talk about, is a simple breakdown of understanding life insurance and what life insurance can provide, right? So what O'Neill Marketing can provide with life insurance is about 120 different carriers that we have on the platform. And with this platform, you're able to run your own quotes, or if you decide you do not want to run their own quotes, you have a dedicated team that can support you with O'Neill Marketing, that we can help you step by step how to run illustrations, how to basically go in front of your client and to be prepared, and we can prepare hands-on an approach. This approach doesn't hurt you in any compensations you work with O'Neill. At the same time, it doesn't affect anything on you as the agent of record. So I'm going to start off with very basic concepts. And the goal is, with this training, we'll have other trainings in the future that we can prolong with different advanced concepts. So first category we're going to talk about is the 3 circles of asset under management. My specialty now, it's been 15 years. I work a lot with a lot of wealth advisors. Those are usually around 60% of the advisors that I work with are very high-end wealth advisors. 40% works in the insurance realm. They do Medicare, ACA, group, supplemental, life, and some fixed annuities and long-term care. Well, in this industry, there's 3 categories that everybody works with, right? If you're sitting down with a client and you're analyzing it, you analyze the 3 subjects. Retirement, that means you're protecting for the future. Your insurance, you're protecting what's going to be for now. And then for your investments, you're taking the risk of analyzing what is for your assets under management. A lot of clients use this, and financial advisors, when they're sitting down to analyze their future and their platform or portfolio for themselves, right? The good thing, which is really interesting, life insurance is involved in all 3 categories. If you're preparing your life insurance for retirement, there's a concept called LIRP, or succession planning. And LIRP, you're basically using life insurance for retirement planning. And with life insurance retirement planning, you're using these permanent products, as in VUL, IUL, or whole life, to build cash accumulation into the policy for your client, right? If you're using the insurance approach with life insurance, there's a category for death benefit, or as well living benefits, or just strictly you can build a mixture of life insurance with cash, living benefits, or death, or long-term care into your life insurance product. And of course, on the investment side, it goes back to the accumulation. So the next category that we do on the three assets under management, and I'm glad, thank you, Sarah or Lois, for switching that, right? Um, is when you're looking at it and you're analyzing those categories of that. Can you guys step back to the last category? I'm so sorry. Go back to the last one that you did. That one, perfect. When you're going back to these categories on the investment, on the insurance and retirement end, when life insurance is set up into this category, right? When you're a financial advisor or even insurance advisor, because most insurance advisors could still be a financial specialist or analyst or consultant to set up and organize how that works. Usually, when you're looking at that, these investment insurance advisors, right? They look at the three-pronged approaches of this concept, and it usually works. So when analyzing this and reviewing it, remember the goal is with life insurance, you can go in all three realms. If you mind, please go to the next category. And it's going to be how does perfect. So when I go down to life insurance and I'm sitting down with a wealth advisor or a financial advisor or insurance advisor, there are situations where, believe it or not, 90% of us don't understand how this business works on the back end, right? And to understand how it works on the front end, you have to know understand what's the back end for it. In this realm, there is a plethora of categories how the hierarchies of this industry works. If you're into a carrier, if you guys imagine a big bubble in the sky, right? And this big bubble, there's all the insurance carriers, there's all the financial carriers, there's all different types of scenarios that you're doing. There's going to be really 2 to 3 or 4 categories you're going to look at, right? If you're a straight insurance guy, you're either going to be in the IMO or the FMO side. IMO means independent marketing organization or field marketing organization. Independent marketing organization deals with industries in life insurance, long-term care, disability, and annuities, and also in investments. If you're going to be in the FMO category, where Trineo is a big anchor in, you're dealing with all the health insurance brackets and concepts of helping ACA, Medicare, group, supplemental, international insurance. If you're dealing with the P&C realm, right, you're going to be dealing with strictly auto, home, car, workers' comp, anything in that category. And if you're in the broker dealer space, in the BD space, you're dealing with the securities, stocks, bonds, commodities, options, and now it's involved with cryptocurrency now. So when you're looking at all these categories, you need to understand that to go into the insurance realm, into the IMO space, as in called life insurance. Um, can you please go to the next category? Let me know when you're there. Perfect. So this is the most important part on the category for basic life insurance concepts. When you're in front of a client, you need to figure out what exactly they're looking for. Most of the time, when you're an insurance agent, you look at what is the best, quickest objective for your client, right? When you're dealing with health insurance, or what's the quickest way you can resolve their situation. Life insurance is a different animal. When you're looking at it, you have to either decide, are they going to look for a term concept or are they looking for a permanent concept? And what do I mean that? When you're sitting down with them, you're going to analyze, are they looking at term? And term is strictly a moment of time that you're getting coverage for your insurance needs, meaning that if you have a business loan or a home loan, or if you need to be covered at a certain time for 10, 20, 30 years, or even 1 year, right? But there is a better, longer approach for most clients. Historically, a client only holds their life insurance within 1 to 7 years of their policy. Then they let it go. But if they decide they want a permanent coverage, it's going to be a better avenue for them to get better coverage, like index universal life, whole life products, survivorship. At the same time, there's variable products, which most of us are not in that market. But I would highly recommend now with how the pandemic is happening and surpassed, that is not a really good approach to go into most of the time unless you are security licensed, right? So when you're breaking down these concepts and you're analyzing it, it's very, very simple. So what I'm going to do right now is I'm going to give you a brief sample of each concept on the phone. It's going to be very quick, very simple. And while we're on this, guys, I want you to remember this. This is just a quick breakdown of life insurance. Once we finish this call, we are going to send you this PowerPoint. At the same time, what I want you to know is we're here to serve you. We're here to work for you. So if you decide you want to work with us or you have more in-depth questions, ask us. We're here to help and we're here to provide for you. So let's break down the basic concepts and the advanced concepts real quick. Basic concepts. Term. I go back to, like I said, it is the moment of time. It's just coverage for a time that you need, either for a loan or for a coverage for you and your family. Simplified issue. Simplified issue is for something that usually when you need to get it done and done, basically it needs to get approved within 24 to 48 hours. Very easy, very simple, and it's almost guaranteed. Strongly word, G word, guaranteed. But you have to be very careful with simplified underwriting because what happens is when the client doesn't fit in those categories, they automatically will be shift back to do underwriting, and they'll have to do their exams or their pyramid exams on that concept, right? Simplify cuts that exam that you don't have to do it. The problem with a lot of these carriers and life insurance is they do something called an MIB report with their clients, medical insurance background. They look at that, they analyze their life insurance. I mean, they help their license as well of their history of driving record, and that will analyze them to decide, okay, this person is simplified and guaranteed, or they're not. And at that point, that's when you go straight to underwriting. So I have a lot of clients. What happens a lot is they want that and they're not healthy, and then they go right back to it. So that happens a lot in this industry. People they're very, very confused. Simplified and guaranteed are very simple. Guaranteed issue is basically just guaranteeing it no matter what, you're getting approved. The situation with guaranteed issue, everybody, is when you are approved, there's a 2 year threshold with most carriers when they find out that you have a health condition and they'll backtrack it. They'll either pay your premiums or they'll require you to do an examination when you do a guaranteed. You have to be very strict and very careful how you handle that with clients because they'll go back to your client and they have to do that exam. And then guess what? If there's a chargeback, if you get advanced commissions or something happens, you automatically will be affected and your client as well. Then there's a category called final expense. So final expense actually lately has been very, very popular in the industry with a lot of these clients that have been interested in final expense. All what final expense does is funeral costs. When you're in a situation where you just need to be covered on funeral costs for situations for your family, that is the perfect product because you're automatically going to get approved. Anything under $50,000, or I'm sorry, $49,000 in death benefit and below, it's most of the time considered final expense products. Mortgage insurance. Mortgage insurance is just 15 and 30-year term. When I go back to the moment of time of term, is 15 to 30 years. That's it. That's what mortgage insurance is. It gives you the accurate amount of what your coverage is. At the same time, you are basically just covering your coverages for that loan while it decreases. And most of the time with those coverages, they start going down and down, down. You have to analyze it every 2 to 3 years. Then you're looking at income and protection, debt protection. So a lot of financial advisors use this and they use it with term. And what this does is basically, let's say for instance, we have John Smith, he's a client, and he has about $30,000 in debt, better yet, $100,000 in debt. And with that $100,000 in debt, he's sick, something's happening to him that if, God forbid, if something happens, he cannot afford to pay off that debt. His family has to take care of that debt. Well, if you set up a life insurance for that, it will cover those costs. And every time you pay off a certain amount of level of debt, you decrease that level amount of coverage. Then there's impair risk. Impair risk, everybody, is just for somebody for disabilities. Impair risk is very, very popular when you have a family or someone with autism or someone with a disability. Carriers will give you usually a flat rate or a certain type of rate on top of a table with your coverage for the impaired risk. Only a few carriers really offer special needs for that. Then there's life settlements. Life settlements is a very simple concept. Think about it like this. You are in your 70s or 80s, and you don't use your life insurance at all, and you need money. What happens is there are companies, even carriers, that will purchase your life insurance upfront from you and pay the rest of the cost. So if your insurance is $100,000 of coverage, automatically they say, okay, John, I'm going to give you $50,000 upfront right now for your policy so you can have that money upfront. At that point, someone sells it, they take over it, and that is considered life settlement. Then you have return of premium, which one thing I strictly aware everybody once I'm reviewing this or when we're reviewing this for you, return of premium is disappearing in the industry, just like waiver of premium. And why? It's not effective for the carriers. They're actually losing more money. It's more increasing for the client, but that rider is actually disappearing. So there's only a few carriers and a few concept of products that they will add that type of product, just like waiver of premium. It's exactly what it says. Living benefits. So living benefits is a big category in our industry. Think about living benefits in this category where you can take at least 75 to 90% of your death benefit to coverage your medical assistance living, like terminal, chronic, and critical illness. That's a category that we're going to talk about later on the PowerPoint, but is a very, very good key component to talk about your client, especially when you're a health insurance agent. It is a very, very easy way to offer life insurance on a client because they're going to love that product. So that is the basic concepts of life. I went really, really fast on that concept, but where the really the need greeds on the life insurance concepts are the advanced markets, right? Where a lot of the categories where you're helping these clients and a lot of financial advisors use it, advanced concepts are huge. So when you're looking at advanced concepts, there's a few categories that you need to analyze, right? Whole life is considered the Ferrari or the Bugatti. I love Bugatti. The Bugatti of all life insurance. They're the most expensive product you're gonna buy in life insurance. Not everybody can afford it, but everybody wants it, right? In life insurance, when you're doing the whole life, it is basically guaranteed. And I use that word very strictly. It has the three guaranteed on there: guaranteed cash, guaranteed premium, guaranteed death benefit. And what that means is on whole life, when you're reviewing whole life, there's a guaranteed 4 to 5% interest rate when you're pulling cash into the market. What does that mean? When I'm sitting down with the client or an advisor, think about this. Think about one single dollar every time you're putting into a life insurance policy. There's three ways to use that dollar, right? First way is you're going to basically use a intermediate concept, which means 75 cents of a dollar is going to death benefit, 25 cents of that dollar is going to cash. Then you're going to use the second category. If the client's conservative, 50 cents of a dollar is going to cash, 50 cents is going to death benefit. And if you're going to go to the category of max cash accumulation, where you're going to be aggressive on cash, that means 75 cents of each dollar is going to cash, 25 cents of that dollar is going to death benefit. Why do I use that term with whole life? It's because that's how you run whole life products. The same thing you're going to be doing is for index. And there's a category that says index life. Index life and whole life are exactly the same. There's only a few things that are different. Index life, you have a cap and a floor. And what does that mean? Cap could be at 0 or 0.10%. Floor, that's a floor. Cap can be all the way to 10 to 13%, depending on what carrier you decide you want to go with, right? And historically, an index product goes back from 4 to 7% of interest rates every time you're putting that $1 into the market when you're investing. Whole life is exactly the same, but it's fixed to a guaranteed 4 to 5%. It doesn't change. It's not gonna move anything into the product. It makes things very, very simple. Those are the two differences. When you have a client in that category and you want to run something in that concept, it is a very easy way to compare. The only situation in our industry now is, and whole life right now, there's only a few carriers that sell it. Index, everybody loves that product because it's so flexible. I even love that product, and I'm a big whole life guy. I've been a whole life guy for many, many years. Then you look at a category called variable products. Now, variable products are only for advisors that are contracted and security licensed on a broker-dealer space, meaning that you are allowed to sell security products and you're allowed to sell variables. So if you're in this bracket, we can provide this for you in O'Neill Marketing, but you have to understand there are certain guidelines to your broker-dealers depending on what carrier, and we can provide a handhold you with that if you want to go in that market. As well as, which I love this product, it's called Universal Life. So Universal Life, guys, It is an extended term. I'm going to repeat that. It's just an extended term. Universal life is just term insurance after 30 years. So it's really 35 years or above. It's just a hybrid term. That's all it is in a permanent bracket with concepts. So those are the categories that are very popular and permanent. The next one is survivorship, which is really, really rare. In survivorship, it's usually you have two people in that category product, and the two ways you can sell it is either you have a business partner and you both want to analyze yourself together on it, or you're a spouse, you're married, and let's say one of your partner is ill and the other one's healthy and strong. By doing that, you can run both categories together in survivorship, and you can basically put the life insurance product together. Sometimes it's much cheaper. The problem is it's called second to die, meaning that the person that is ill, they won't pay out that death benefit unless you add a rider on there. It's really going to be the last person that's going to pass away of the spousal unified front on this product, right? Um, domestic and foreign national business. Domestic and foreign national business is actually one of my specialties, especially in this industry. The foreign national business, it's exactly the same of health of any life insurance product. The difference between there is you're dealing with visas. And when you're dealing with visas and people that are coming to the United States, they have to have a few categories into that realm. First, they have to have an attachment to the United States, more than $60,000 of assets that they need to have in the United States. Second thing is they need to have a purpose of why they're having an insurance and why they're going to have the attachment to that coverage to stay in the United States. Third, they need to be qualified. When you're qualified, you have to have certain net worth of assets at the same time that attachment to the United States. That's it. That's what foreign national business is. It sounds very simple, but it's actually more complex. If any of you are interested in that foreign national market, again, we're here to help. We can analyze it, we can break it down for you. It's very, very simple. Now, I want to go real quick to the next category. It's called premium financing. So, premium financing is a realm where you're dealing with a client that's usually higher than $5 million of assets under management. And usually in this market, I actually cover at least I actually help at least 5 to 10 of these premium financing cases come my way per year. And with this cases, it's really simple. Let's say, for instance, you have a client, their net worth is more than $5 million, and they decide, hey, I want life insurance, but I don't want to pay it out of my pocket. So what they do is they find a lender or a bank to lend the exact amount of money to pay for this life insurance bracket or this product. And how the lender or the bank gets paid back is by the interest rates of returns that they're going to get from the index or the whole life product. That's how they're going to get the payback. And usually that could drive it to 10 to 15 years. And guys, I'm probably confusing you guys a little bit. If I am, I do apologize. If you are interested in this market, come to O'Neill Marketing. We can provide this to you. We can handhold it. It is a little more complex, but it's just basically simple to you're basically having a lender pay for your life insurance policy. They get their profitability back from the earnings of the policy, and then you're basically covered on your side. Then now we're going to look at real quick is if you look at the category deferred comp, executive bonus, key man buy key man buy sell, split dollar, succession planning, charitable trust planning, and estate planning, and IRA wealth transfer and legacy planning and retirement planning. All those categories are in business planning. They're all in the same category, and it's called diverse compensation or deferred compensation. And what does that mean? That means is if you are in the business market, there is so many ways to diversify to benefit to keep your important executives or your important employees to stay in your company. Meaning that, let's say for instance, if you decide to do executive bonus, right? If you have a board of directors, well, and you're capped at how much you are able to pay them, incentivize them, or help them with any bonuses or stocks, right? Well, you can use life insurance and you can help build cash accumulation to lynch them to stay in the firm with you. A lot of attorneys, a lot of physician firms use this to give extra benefits for their employees or executives that are in the firm, right? Then you have key man. Key man is exactly almost as executive bonus. What Keyman is, give me an example. Let's say I own a car dealership, right? And I got that one guy or one female, right? Or one person that sells the best in my car dealership. And I don't want to lose that person. They made me so much revenue through the years. Well, I capped them out on commissions. I capped them out on salary, and I need to find another incentive to keep them happy to stay with my practice. Well, I use Keyman. You use a life insurance policy where you're going to build cash in the life insurance policy. And at the same time, their family and they are the contingent, that they're second beneficiary, and the company is the main beneficiary, or you can split it in half where if he decides to leave or something happens to him, you are still covered because you either have the cash just sitting there to pay someone else and to find another replacement, or the death benefit if he passes away to cover him and to control to find somebody else that can replace him, right? That's a very, very important category. Then you're looking at a category called buy sell agreement. So in the business concepts, a lot of us always have multiple business partners, right? In this industry. If you got one or two or three business partners, it is very, very normal. What happens though in this market, and I've been seeing it a lot lately, when you have a business partner, most of the time you don't want to deal with their families. You just want to deal with the direct relationship that you have as a partnership, right? Well, this will protect you if something happens where you can set up a life insurance policy and at the asset net worth of the company, you can put a amount of death benefit. So if something happens to your business partner, automatically you are able to pay the family the net worth of the exact amount of what that owner share of your business partner owns. So I'll give you an example. Let's say John and Daryl, right, are business partners. They own 50-50 of a car dealership. This car dealership is worth $1 million net worth. And they decide, and let's say John passed away. Well, John passed away. He bought a life insurance policy that it's $500,000 of his net worth. And Daryl did the exact same thing. So now, because he has that $500,000, he can write a check to his family to buy them out. So he's 100% owner of the firm. And most of the time, a lot of people think, okay, how can that happen where they're not going to go back and take me to court to try to fight to keep half of the business? Well, everything is going to be on paper when you're doing a buy sell agreement. And that buy sell agreement, there's forms that these carriers have that you got to get notarized by an attorney that automatically states what is the percentage stake of what you own. This concept is very, very popular in most states, and a lot of insurance agents bring this up after they speak to their client. It's very, very important. Then we have a category called split dollar. So split dollar and private split dollar are very, very similar, even succession planning. And what does that mean? That means basically if let's say I go back to that car dealership. I own this car dealership and I have a sales rep that I love to work and I don't want him to go anywhere. And he needs more benefits or more coverages. Well, it's simple. I told him, look, I'll set up a life insurance policy for you. We'll build some cash and every dollar to dollar, I will match you to pay the premiums on your coverage. That's what it is. You're basically paying dollar to dollar average into basically matching on that part. And succession planning is the exact same concept, but really you're looking for a successor on top of that too, so they don't leave the firm. Charitable trust is usually for somebody that, let's say they're single, they're by themselves, and they still want life insurance. Or if you're looking for like a church, like a pastor, or like a charitable community, or a board member that helps a big private community, or in that bracket, charitable trust was perfect. In this realm, churches love this because they can cover their pastor or their how do you say the heads of the church, and if something happens to them, they use that life insurance coverage to pay to find somebody else. This is paid by the charitable company. At the same time, it is a tax write-off if you're a nonprofit, and there's ways to do it with your CPA if you do that. Then you're looking at estate planning. Everybody know what estate planning is. It's basically if you use a will or a trust and you have to use the life insurance product to take at least the tax part out on your coverages. What happens is when someone passes away, the IRS is looking for their money, right? Uncle Sam wants their money. So usually you get taxed around 33 to 41%, depending on what state you are in. Well, now with California, I'm sorry, it's going to be 50%. So it's 33 to 50%. They just recently changed it. And with estate planning, you add a life insurance policy to pay off those debts and those taxes with that death benefit. So it doesn't affect any of the properties or any of the assets the family has in the estate. Then you're looking at RA wealth transfer. RA wealth transfer is very simple. You have a 401k or an IRA, you're able to convert it on a 1035 to a life insurance policy, tax free, while it's building cash accumulation. That's exactly what it is. We have a lot of carriers that we can offer you that. There's actually over 80 carriers that have that concept that we can shop for you. There's legacy planning. Legacy planning is for your grandkids. Let's say, for instance, you have a situation where you're a grandparent and you want to have make sure that it's called a generational chain. You want to break any generational chains or any situation that it will protect your grandkids. The grandparents are the ones that are paying it, so they're the owners of the policy. The insurers will be the kids that are healthy, those are the parents, and the beneficiary will either be the will trust or the grandkids. Legacy planning is very, very popular for Medicare clients. So if you guys are selling Medicare, that is a huge market for you. Then you're looking at retirement planning, where we talked about in the past, where you can use cash accumulation to take out withdrawals to make an annual income for cash. Then you have college planning. College planning is very, very popular in our industry. What college planning does is you're basically setting up a small life insurance policy and you're building cash accumulation tax free to build cash. So then there's a way to use that for college planning for kids. Gerber does that a lot. Mutual of Omaha is huge in that market. AIG and as well Principal is huge in that market. We have several carriers that offer that concept and what we could provide on that. So that is a quick, brief concept. I know I threw a lot at you guys on that. I went very quickly because, again, this is just a basic concept for life insurance. I will be emailing, or the O'Neill marketing team will be emailing this to you to basically review. And if you have any further questions on this, we'll keep break it down together and we can chop it out. So um, please, can you go to the next screen for me, please? Okay, perfect. Life insurance and categories. So when I'm sitting down with an advisor or a insurance agent, there is three categories that usually comes up when I'm talking to them. Either you're going to look for a traditional carrier in the realm for your client, or you're going to look for a living benefit carrier, or you're going to look for a final expense carrier. What I categorize, this is what Omino Marketing can offer to all their agents, is our top core carriers. Now we have more, but these are the main carriers that in the three realms that we can shop consistently, and we have a very strong relationship with these categories. Now, with this, I'm going to be basically helping any agency that is interested in this. We can contract you and set you up very easily. There's going to be another page that's going to show more of the carriers, but I just wanted to break that down. When I'm sitting down, I analyze what market are you going to specialize in. Some advisors and agencies specialize in all three, but either you could be in traditional, living benefits, or final expense. Next page, please. Perfect. So in traditional life, what we're going to do is I'm also going to break down the concept. So in traditional life, there's three categories that really control the realm of traditional life. There's the premiums, meaning that how much the client's going to pay in premiums. There's the cash value, meaning how much cash values they're going to build, and the death benefit. What's the death benefit coverage you're going to on that platform, right? Traditional life is in those three categories at all times. And I go back to that thinking of that $1 concept. It's very, very similar and connected to that. Next category, please. Living benefits. Perfect. Okay, so and I bring this up a lot because in living benefits, it is so prime in our industry, especially on the health insurance side, where you're looking at it and you're analyzing everything, right, with this product concept. Living benefits has a category where you can take 70 to 90% of the death benefit and use it for living benefit needs. That's chronicle, critical, terminal, and of course, there's death benefit. That's already a must. And what does that mean? Chronic illness is basically if you have a chronic illness, like a symptom that you are set up that you need assistance, you can take out that cash and that death benefit to use it. Terminal is something like cancerous or an illness that's untreatable or a category where it's so expensive for medication, and you look back at the category where, let's say in health insurance, most of the time when you're doing these policies and they can cover up to 80% of your coverage, you can use this category to help you with that category, right? Terminal is, it was critical and critical illness. I'm sorry, critical illness is is if you're injured. Let's say, for instance, God forbid, you had a car accident or something happened to you, right? Well, that's a critical illness where, let's say, you have a bone fragment or something issues with your bones or an illness that's so unstable, but it's controllable. You're able to use that in the health insurance category, right? So in living benefits, I'm going to go back. In living benefits, you're able to take 70 to 90% of that death benefit to use. It's a very simple concept. The heavy hitters in this industry are North American, National Life Group, Transamerica, Foresters, and Emeritus. We offer all 5 carriers on those living benefit carriers if you're looking to that. Um, can you please move to the next category? Final expense. Now, I know in the beginning of this PowerPoint, we had a conversation. I said final expense is getting really popular now because of after the pandemic. It is. Why? A lot of clients that I've seen with these advisors that I sit down and I help, they want something very fast and easy that just covers funeral costs. Because of this pandemic that happened in the last few years, um, the death toll went up across the country and globally, right? Well, because of that, a lot of these carriers have gotten more stringent and more, how do you say, strict in getting clients approved for life insurance. These final expense carriers haven't. They'll approve you instantly. One carrier, which they're going to talk tomorrow, is called Senior Life. Senior Life is actually a really good company where they will approve somebody within 24 to 48 hours at times. And for an insurance agent, which is great, you also get paid within the week. So at the same time, the client's approved, you get paid, and they're covered. It kills two birds with one stone. At the same time, most of the time, these coverages are less than $30,000 of coverage and death benefit, right? There are some carriers like Mutual of Omaha, Gerber, and a couple other ones that do up to almost 49,000. But exactly what funeral costs are for this, it's so much cheaper and it helps the family. So next category, please. So before I have any questions, and I know I went through a lot on this category, there's going to be this category and there's going to be a breakdown of all the carriers that we provide again, just so you guys can see it. There's the process of life insurance. This is very important because you'd be surprised a lot of agents or advisors don't understand the process. So when you're looking at a life insurance product and you present it to the client, we run the quotes, you present it, they want it, you fill out that application, and they're ready to go. It takes 1 to 6 months to close a life insurance policy. But if you do it correctly with certain parameters, it can go half the time to 1 to 3 months or even faster to approve somebody if everything is pinpoint accurately. So what I like to do is when I'm sitting down with an advisor, I teach them and I make them understand the process, right? You automatically have to first, let's get contracted with these carriers, right? Any of you that are interested in working with us, let's get you contracted. Let's get you set up. At that point, then we're able to either give you access to the illustration systems or we can run it for you. It's at no cost to you. It doesn't change the compensation, either direction you go. Then when the client's ready, where we can help you, point of sale, or we can give you bullet points, or you can do it yourself. When the client places that application, it goes to a team. It's called a new business for the company that we offer as well, but at the same time for the carrier. New business is right in the middle where the underwriters and the agents speak together. They're the middle person, where they're going to basically analyze what else you're missing or what else you need to send it to the underwriting. And when underwriting has it, they have the keys. They make the final decision on what the client's rate class is. And the moment they approve it, it goes to delivery to be sent out to the agent and the client so they can sign off to it. And then that's when the advisor gets paid. That's the whole process of life insurance. It is a lot longer than health insurance. It is more stringent, but if you do it accurately and you do it correctly, it is a very, very fast process. And when I go back to that, why I say fast is because if you think about it, most of the time when I have a client or I have an advisor bring in a client and they ask for life insurance, there's a high chance they have an illness or there's something going on, right? That the family needs that coverage. So I asked them to do two things: either a risk assessment, where I just need a couple basic information, which O'Neill Marketing can provide you a form for that, or an informal application where we can shop it out to all of our carriers and we can get an accurate rate class from the client. We have those forms. When you sign up with O'Neill Marketing, we can actually set you up that you have all that prepared for you. So if you have in front of a client, you can get that filled out. And that actually makes the process of this go a lot faster. Instead of that 1 to 6 month range, it could go down to a month, month and a half, or even less because you have the core carriers that approve your client. So that's the basic, easy process for it. Um, can you go to the next category? And I got, and again, I'm going to have questions at the end, guys. If you have any questions at the end, I wanted to create a category for fixed products because most of us, when working with the O'Neill Marketing, you're either an insurance agent or a financial advisor, but most of the time you're just a straight insurance agent. So that means you don't have a securities license. Well, these categories right here, these carriers offer the products that are fixed. Are you able to not be securities licensed and you're able to sell it? So this is our main core carriers that we offer, from life, annuities, long-term care, and disability insurance that we can provide for you. Again, guys, you're also going to get a copy of this. So it's going to be very, very easy, guys, for you to review. And if you have any further questions, we can organize this and break this down for you. Next category, please. It should be questions. All right, perfect. All right. So I went through 45 minutes of a conversation. I know I gave everybody here a lot of information very quickly, but don't worry, it's going to be very, very simple, right? We're going to email you this PowerPoint. If you have questions, if you want to go through this with us, give us a call. We'll analyze this with you. We'll break it down. We'll go through everything for you. This is just a brief concept of life insurance. So if you want to get more in depth of any concepts, any breakdown of anything, we have other PowerPoints for each category concept that we can send you once you're signed up with O'Neill Marketing. We have all those breakdowns with detail for any carrier, anything you need. We just wanted to basically simplify this idea of a webinar for you guys. So I'm going to leave the table open. And again, I do apologize, my accent, because I am Spanish, so my accent does switch once in a while when I do talk a lot. So I'll leave the floor open. Anybody has any questions they want to go through with us, I'm here, and I'm here to serve. Whatever questions you guys have.
I think we're going to administer the test now, aren't we, Eli?
Administer the test.
Yeah, make sure everyone understood everything.
I love it. I love it. I love it.
Well, you're definitely a wealth of knowledge. So I think our agents know if they have any questions about life insurance, you are the man.
I'm here. And
Yeah.
again, just so everybody knows, we have a staff of employees that we can help, from underwriting to new business to illustrations to ideas to concepts. And if we don't know the answer, we have all the relationships with these carriers, so we can easily speak with any carrier specific you need. Now, as well, before we get off, compensation. If you guys have a compensation that is high level, we have a very high chance of matching any compensation you have. So if you decide you want to show us a carrier and we have the same exact contract, there's a high chance we could probably get a better one. So if you need to sit down and review those commission levels, we're here to serve and we're here to answer that as well. So I'll leave it off of that, and any questions, I'm here and the team's here as well.
Good. Well, thank you so much, Eli. And I just want to remind everyone that we will have this webinar on our YouTube channel, and I will be sending the slides to everyone that participated today. And that will have Eli's information to reach out and touch or contact him with any questions that come your way. And any of your clients that might need life insurance, just reach out. Tomorrow at 1 p.m., we will have a webinar with Senior Life, and we will be talking about final expense. That will be burial and funeral costs. So we hope that you can attend, and thank you very much for being a part of this webinar today. And thanks so much, Eli, for joining us. We really appreciate it.
We're here to serve.
All right. Take care, everyone. Bye-bye.